Well, policymakers have failed to deliver what global investors needed most of all, a convincing plan to address the severe debt problems destroying confidence. Investors continued bailing out of equity markets around the world despite the European Central Bank's plans to buy Spanish and Italian bonds. And the US credit ratings downgrade is adding to the uncertainty and grief engulfing investors. Markets throughout Asia continued where they left off last week with another wave of selling. This report from Philip Lasker.
Many Australians spent yet another day watching their wealth evaporate, and they're scared.
We think we're going to change our strategy and our superannuation and get out of shares and go to cash.
I think it's a bit scary at the moment. The whole world's got too much debt.
Those fears played out again today as widespread selling sent the ASX 200 down nearly 120 points, dropping below 4,000 for the first time in more than 2 years. So today's near 3% dive means the market's off more than 11% this month, and almost 20% since the April peak.
People, regardless of what they believe, learn from the GFC that if you're wrong about markets being, staying buoyant or not going down anymore, then you lose too much money. So people have cut risk regardless of the fact that they think that they're probably okay.
Investors weren't calmed by the European Central Bank's move to buy Italian and Spanish bonds. Instead, they were rattled by the US downgrade and where the problems in Europe and the US might lead. With much of Asia's savings invested in the giant US bond market, Japan's finance minister was forced to come out in support of the world's biggest debtor nation.
The pathway has opened up after the United States decided to substantially cut its deficit. With full implementations of what has been agreed, I believe that US government bonds remain an attractive financial product.
We still have 1 to about 3% still investors pessimistic about the future, not only because of the U.S. losing the AAA credit rating, but really worry about the economic slowdown in the U.S. and Europe.
Credit ratings agency Standard & Poor's, which is under attack for downgrading the US amid the turmoil, was inundated with calls from nervous investors in Asia, so it issued a statement saying the US downgrade would not have any immediate consequences for the Asia-Pacific region.